Hello viewers, welcome to my channel, Sensor 360 Investor, where we apply best practices from around the world and the companies we invest in and apply it to the investing process. Investing is a complex affair, and here we integrate the different segments into a cohesive framework usable by the retail investor. Today's video is going to focus on markets. And in this session, video session, we are going to take a look at the markets in terms of the S&P 500 review, cover the treasuries, look at sentiment, indicators, equity indicators, earnings, see what's on deck this week that may be tradable. And then I've added economic calendar this video session, and also going to introduce one stock as a stock idea for the week that you may want to take a look at. Okay, before we begin, a quick word about the disclaimer. This channel is not providing financial advice. Please pause, read, and then continue. Okay, so without much further ado, let's begin the show. So here's the S&P 500. This is the long-term view, which we keep an eye on. As you can see, we're still kind of locked into this overall downtrend. The downtrend hasn't finished, even though we had an excellent 2 days, Thursday and Friday, and we'll take a closer look at that. And so here is the daily, and we can see how we've been testing this support zone here just above this kind of area where if the market downtrend continues, we may test at some point. But for certainly now, the support zone is looking like it wants to try and stay above that. But also, interestingly enough, we may be beginning to form a trading channel here. And if that forms, then this could be a bottoming process in the makings. So that's something we'll have to watch out for in the upcoming weeks. So here is the hourly chart, and we can see how the hourly chart actually was tradable for those of you who can do that in the short time frames. And we are now, it looks like, definitely based on the dailies and the hourly chart, we're probably looking at 4,100 as an area that will get tested to the upside. So we're sitting at almost 4,000, so probably another 100 points here certainly is not off the table. And then as usual, the breakdown of the action on a technical standpoint. So over the last 25 days, there's been 6 notable selling days, and this has been coming down, as I've pointed out in the previous videos. And we've also seen an uptick in the accumulation side. So over the last 25 days, 4 days have had accumulation profiles, and one of those has come in the past week, which is probably here. And then from an up-down ratio perspective, so over the last 25 days, there's been 7 up days, 6 down days. So this relationship ratio has also changed for the better. So certainly we noted a couple of weeks ago that the picture was improving, and it has continued to improve. Now the caveat here is, again, we're looking at 4,100 as the next point of resistance probably, and then we'll see what the market has to say, if and when it gets there. And then on the treasury side, part of the rip in the markets was because one of the yields have been coming back, and then we had the lower CPI print. And then about 3-4 weeks ago, I noted that there was capitulation selling signs in the 20-year treasury in the bond fund here. So since then, it has kind of put in a low, and it's been moving up. So that there's a resistance point just above where it's at, and on the yields, 10-year yields, those are sitting at like a support zone. And in terms of the fundamentals, 10-year treasuries 3.81%, S&P 500 trailing yield is now 4.86. Dropped a little bit, but still kind of shows that the S&P is slightly undervalued. from where we're at. And then if we look at the relationship on a slightly different perspective, so the green line here is the Treasury yield. The pinkish purplish line is the S&P. And I noted a few weeks ago that even though the yields were moving up, so the trend was up here, the market wasn't making new fresh lows and wasn't continuing its downtrend, and that there seemed to be a little change of habit. So I boxed that in for you so it's clearer, and I've put a line up here that shows you what the upward trend. So we had divergence, and certainly since that divergence was noted, the S&P has come out on top of the box and moved up as well. So we'll see how this plays out. As certainly with Treasury sitting at support, and the blue line is the dollar. The dollar's also pulled back in, which is also a positive sign because has a strong dollar doesn't help the big internationals. And then the other notable item was on the put calls. We did get above that 115, 120 zone up here, which we hadn't seen for a while, and that suddenly marked a tradable bottom. And so anybody top of this could have seen that and then have positioned themselves accordingly and participated in this rip that we've had. And then on the fear index, again, secondary gauge, on the long term, we can see the VIX really hasn't kind of gotten up into those areas where markets will bottom after a correction, just hasn't reached those levels. And here we can see that they've pulled back into kind of the 20 zone. And so there just hasn't been real fear in this market despite the pullback that we've had. And then onto the AAI sentiment survey. Again, point to note, it wasn't that long ago, September, that the bearishness reached a record high, 60.9%. And even though we've had a couple of days of strong tape action, the picture still remains not so good because the bears still outnumber the bulls here. And then on the spread, we can see the spread's been coming down. And so as I notice this contrarian indicator, so it's kind of getting into the stage where it's saying, being greedy is good. So indicates it's coming into areas of the market where may want to consider buying. Okay, on to our earnings watch. So not a lot of stocks of notable earnings to report on. There were a couple. So because Zoom video kind of in line may beat, and then Rosters and ADI both look like they may beat in terms of where we're at. And so on the positive side, so these were the three, and then there's only one on the negative side, Woodward, which is predicted to miss. And so this is always worthwhile watching. And then I've added a new slide, economic calendar, since the economic updates and the reports that come out can be news worthy and market moving in the short term. So this week, certainly on Tuesday, we have the PPI report coming out. That definitely can have an impact. And later in the week, there's the housing sales on Thursday and the existing home sales on Friday, and then we have jobless claims on Thursday. So a couple of events next week that could have a short-term impact on the markets too. Okay, so on to another new feature for this video session on the markets now. I'm going to introduce one stock idea for the week, and it's not a recommendation. It's just something that you might want to take a look at. And the stock idea for this week is Raymond James Financial. It's in the finance sector. Stocks is locked into an uptrend, which is good. Did poke its head up to recent highs up here. So this might be one to watch and study for you going forward. Okay, so that completes the market update on November 12th, 2022. If you haven't read the disclaimer, please pause and take a quick read of that. That would be appreciated. And additionally, more appreciation if you haven't subscribed, and if you can subscribe to the channel. If you like this video, please click the like button and share it with your family and friends. And if you have any ideas or suggestions, please leave a comment and I will take a look at those. Thank you for watching. Thank you for listening. Goodbye.